Hello, everybody, and welcome to episode number 11 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Cannoli Fingers, and I'm and I'm here with my infamous co-host, the Saskatchewan Savage, former market maker of 20 years who's been involved with more manipulations than your ex-girlfriend, a man whose name rings bells down on House Street, aka Jim Dalton's Oracle. I'm talking about JJ. JJ, how's it going?
Good, Ray. How you doing today?
I'm doing real good, man. And we're coming off a podcast we did last week with modern day Renaissance man Bill Perkins, hedge fund manager, poker player, producer, etc. Always a pleasure to hear Bill speak. What were your thoughts and impressions from last week?
I was blown away that we had somebody who took the other side of a historical trade on our show. You know, that for me, having him on the show, it was like having Nelson Bunker Hunt on the show. And for those who don't know, that is a gentleman who tried to corner the silver market in the 70s. So, when you have people who are involved in historical trades, that's very cool.
Mm-hmm.
So as a pure trader, that was great. And the other nice thing was too about his philosophy of life, which kind of was a little bit of a slap in the face that I needed. I'm really glad that that he was on and talked about that.
Yeah, no, definitely. And he's even, he's been somebody I've been following for a while, and just hearing that again from him, like the guy with zero philosophy. I realized, all last week I was out spending. You know what I mean?
That's not what he meant. That's not what he meant.
No. I know, no. I'm halfway joking, but it does. It's a very interesting philosophy, and I'm willing to bet a little bit of money. I bet that becomes a bestseller.
Oh, I'm sure it will.
Yeah,
I'm sure it will.
Yeah, so now it was great to hear him talk. And if you guys haven't listened to it, go back, listen to it, episode number 10. And today we're going to be discussing market preparation and study habits of a professional trader. So, JJ, how much time do you put into market preparation?
Well, truth be told, actually the last 3 years. But the thing is, quite a bit. When I was starting out, and I was telling Ray before this, right before the podcast, I really thought I knew what I was doing. And man, I got, some humble pie really, really quickly. So I kind of threw myself into it. And when I found profile in that, it did take some time. So I would watch the market and then I would replay the market at night using the replay feature on the Sierra chart that I have. And then I would watch Dalton videos, and then I would try and apply what he said. So I kind of really threw myself into it. Now, once you're better at it and you have a life, and once you've kind of immersed yourself into it and you can see the market and you know what to look for, I don't know if and everyone's different. Some people can get away with 20 minutes of prep. I like to take at least an hour at night and set up what I see for the next day. And lately I've kind of been trading it, looking at trading at night too. Because that Globex, yesterday was beautiful, a beautiful rotational night. So I do spend a lot of time in front of the screen. And in the morning, what I used to do, which I should be doing again, and I haven't, is getting up a lot earlier, going to the gym, and then doing like half an hour of prep in the morning. But lately I haven't been doing the gym part.
Yeah, no. And on the topic of balance, living like a wholesome life, is there such thing as like overstudying or being like overprepared?
I don't think there's a such thing as being overprepared, but there is such a thing as being a little bit obsessive. And
Right.
being the only trader amongst all my friends and everybody I know in the city that I live in, they tell me that they'll tell me, look, JJ, look, you're a little obsessed. You need to get out of the house. And they'll drag me to a movie, or they'll pull me out of the house somehow.
Right. It's all about striking a balance. Because, I asked that question more of a relating to my like poker experience, and that like I feel like sometimes overstudied in the fact that like when I got to the table and I was playing, I almost was overthinking certain situations to where the answer was actually much simpler than I was making it out to be, if that makes sense.
No, I went through that when I started to absorb information. At first, it took me a while to understand, and then
Hmm.
once I started to absorb information, I took in too much, and then that would cause me to freeze, right, when
Right.
executing. So no, I do understand that. That really does make sense. And for me, a lot of it is psychological. When I was young, I was lazy when I was a kid, so I never studied. Like my mom's got 3 university degrees, like and you know honor roll, whatever, student, but I was just lazy. So I tried to make up for it in my 20s by being completely the other way. So I'm trying to find a balance.
Shout out to your mother. And so JJ, explain what your schedule is like once the market closes. Do you take time to unwind first, or you jumping right back into it?
Well, when I'm being healthy, I'll go to the gym.
Hmm.
Lately, I've just been running errands, and then I'll usually be back in time for Globex. So it's only an hour,
Hmm.
right? So yeah, lately I've been extremely unhealthy. I've been, just because I've been kind of really obsessed with figuring out this market and figuring out, the agendas and how to react to this kind of very politically news sensitive market.
Hmm.
Yeah. So I really have, you talk about balance. I've had no balance for the last at least 6 months.
Yeah. Okay, so I see you on Twitter. You post your TPO charts. Once the Asian Pacific markets open in Europe as well. What are you looking for? Is there anything specifically that you're looking for?
Yeah, I'm looking to see, because the ES which I trade is based on the S&P 500. The markets, the New York Stock Exchange, is not open during the Globex, so the Globex traders can bully the price around quite a bit, because it can get away from the actual underlying equities.
Hmm.
So I'll look for when they push it up, and I have my levels that I've been working on for 3 years, and like last night, I knew that from the bottom it would rotate back up to the top once we fail to gain acceptance under a certain level, and and I'll watch for that, and then I'll watch for the other end of balance, and like I say, last night was a perfect example. Yeah, and I'll see exactly how short they get the market or how long they get the market. If there's any news-driven events that move inventory or skew it, from one side to another too much.
Hmm. Now, how much do you take into account the global market news into your analysis?
Uh, into my analysis, none.
Okay.
What I will do is, because I don't I try not to listen to news. I'm not a news based trader because I can't execute faster than an algorithm.
Right.
So what I will do is I will have the profile will give me a structure, and that structure will also give me levels of where I want to execute if a news driven event takes price to one of my levels. So what I will look for is how price reacts around my levels, how it behaves.
Hmm.
Say if it's, for example, if the market, a tweet comes out and the market just drops really hard. If it goes to my level and stops, dead to my level, or if it gets front run by a couple of ticks off that level, then I know it's technical traders and it's safe to jump in, right?
Hmm.
Because when the other time frame the big funds are selling, my levels mean nothing. They'll just crush right through them.
Hmm. When you say front running, can you explain what that means?
Okay, front running, like in the old days, would mean if I was working on a trade desk and you were sitting next to me and I would hear your client coming in to buy a large position of something, I'd jump in and go long before your client could execute.
Hmm.
That's called front running, because I know that your client's buying is going to push the price up and I can sell into it and make a quick profit. Okay.
Hmm.
Front running nowadays means, if, say if the ES comes to a level, like for example, half back of the day, right? And I noticed that the pace of the slowing slows down as we get to half back, and we don't quite tag it. We'll stop a tick or two ticks short of it. That means that those technical traders have jumped in and front run that level, right?
Right.
Which tells me two things: that one, technical traders are in charge of the market, and two, the other time frame or large natural sellers are not out there, right?
Hmm.
So I can tell that if a market reacts that way after not just once, but two or three times at different levels, then it's a technical market. And in a balance, for example, then you can trade the ends of the opposite extremes of that balance and not use really large stops.
All right, gotcha. All right, so right now, JJ, we're going to take a, brief intermission to do our confession segment of the podcast. I just threw on my clergy outfit. I'm Father Paulie Walnuts. JJ, before the Lord, confess one of your market making sins.
Oh, okay. Well, once I was doing a short squeeze on a deal for a group out of Vancouver, and it was a real motley crew of guys. There were, politicians, guys who were board members of public companies, and then they had some kind of nefarious people in the group too. And they were selling every day. And the guy who had the deal said he owned all the stock, so we shouldn't be getting all this selling. And they kept saying that there was a short seller, and so they called me in to figure out who was selling. And within a very, very short amount of time, I had figured out that one of the members was what we call backdooring, or selling behind the other members back. This
Mm-hmm.
is a very, very common thing when you have five or six guys and they have a large position and they take something public. One of them, they have a gentleman's agreement not to sell behind each other's back. They all sell at the same time. If you read Reminiscence of an stock operator, Livermore talks about pools. Well, that's very common in the under $20 market when you have three or four guys financing a deal or taking a company public.
Mm-hmm.
So anyway, they brought me into this thing, and we were just eating paper at $5 all day long. And one night, it was I think it was like a Thursday night after the close. Everybody runs away as soon as, like, traders, when that close happens in Vancouver, they're gone. They're out the door. And me, not really having much of a life, I was sitting around watching. And about half an hour, 45 minutes after the close, and I still had my quotes up. I see 300,000 shares go across the tape at $5. At $5, and I see another 300,000 shares go across the tape at $4.97. So that means that that's an after hours trade, and it's what we call a backfill. So somebody was having a market maker get short for him, and then decided to fill that market maker 45 minutes after the close so nobody would see it.
Uh-huh.
Unfortunately, I was there and I caught it. Right.
Uh-huh.
And it was a backfill with a give up. A give up is that 3 cents a share on those 300,000 shares for the market maker. That's how much money he made for doing that trade.
Mm-hmm.
So I see that thing print, and I call, I tell the boys, I go, somebody's back. You guys have a back door, and it's coming out of Canada because I can tell by the prints where the stock's coming from, whether it's a onshore U.S. order or an offshore order. And so they got together, and finally the guy, they all kind of knew that this one guy was selling, and they basically berated him, and he confessed that he sold the stock. And the next day, one of the nefarious guys called him up and said, "Yeah, you're in your office right now. Look out the window. There's a rifle trained at your head." And the guy hit the floor. And they weren't actually going to shoot him, but they just wanted to scare him from selling anymore.
Yeah.
But yeah, that was that. That's yeah. I caught him. I caught him red-handed and exposed him, and kind of gave him a little bit of heart trouble.
Yeah. Yeah. You gotta scare him a bit. You know what I mean? Can't let that stuff slide. How often would that stuff like that happen, JJ? I imagine a lot, right?
Every day, every day.
Wow.
That's why the really, really big deal guys in Vancouver, New York, whatever, they ran a lone hand. They wouldn't have partners.
Right.
That way they would have they would have all the stocks distributed in nominee accounts that they controlled, and they controlled everything. And that's why their stocks went from $1 to $15 in traded volume. And and they would take 18 months to 2 years and get rid of 200, 300 million dollars worth of stock, and make a good haul.
Yeah, yeah. It's always interesting to hear these stories from you, man. Yeah, incredible, incredible. All right, so let's jump back into our topic. So let's discuss. I want to discuss a little bit about after hour and the trading volume. So is there anything like specific you're looking for?
Not really. The ES and the micro are so liquid that you can get in there and move 10, 15, 20, 30 lots, no problem,
Mm-hmm.
because it's liquid. I imagine you can even move 100 lots without much trouble at all, and that's swinging a pretty big line. So I will look at the volume in the morning coming into the open, saying, oh, did we have a lot of volume in the overnight? Was it active? Well, that means there was some sort of a news-driven event or something.
Mm-hmm.
Um, but I won't pay too much attention to it.
Okay. And so, how early do you start prepping for a pre-market? And are there key things that you're looking at?
Well, the thing is, I'm up usually quite late at night, so I'll have a picture in my head of where the market was when I went to sleep, and then when I wake up, I'll look and see, oh, it's where I left it, or it came off, or that sort of thing. And then I'll know, and I'll look at inventory. If our inventory is long from the open or short from the open. I mean, from the close of the previous day. Excuse me.
Mm-hmm.
Um, I'll look at the close of the previous day, and then is the inventory above that close or below it? And on balanced and sort of rotational days, Mr. Dalton says there's a 65% chance that that inventory will correct. Um, so in the open, if I look at that, I'll go, okay, well, inventory needs to correct. What's the probability that it kind of will? So yeah, I look at those things. I do about half an hour, 45 minutes of prep before the day.
Okay. Okay.
Yeah.
And from when you look at it at night, right before you go to bed, like you said, is it more or less the same? Is it changing often? Like from your experience?
But it really depends on the situation.
Yeah.
Sometimes if we're in a balance range, we'll just be balancing in like last night, we basically traded in the day's range to the tick. It explored down, then it went explored up, and then it came back to the middle. And so that's one context. If we have a currency sort of thing with China, the market might gap down quite a bit at night.
Mm-hmm.
And then a tweet could make it gap back up. So it all depends.
Sure. Sure. Like a lot of things. And so, what off hour studying do you suggest our listeners do? Books, videos, etc.
The only books on market profile I have read are Jim Dalton's. And I have to confess, it's been a couple of years since I've read them, so I probably should reread them.
Mm-hmm.
Um, I those I read. His videos, of course, are what I grew up on, so I'll watch those. And then I don't know. I carry reminiscence of a stock operator around like a Bible. Like if I take my mother to the dollar store, I know she's going to be in there for an hour, so I'll sit in the car and I'll read reminiscences. I keep a copy in the car.
Yeah.
I have it on my phone. Because of the different types of things I've done in the market, as like being a deal guy, being running stock pools, and then trading my own like by myself. I kind of relate a lot to Livermore's experiences. And when I first read that book 25 years ago, to be honest, I had no idea what the hell he was talking about. And the English was kind of different too, because it's, from the early 1900s.
Mm-hmm.
So, but the more and more I read it and the more trading experiences I had, I'd be like, oh my God, he was right. Oh my God, he was right. And I just had this experience. I mean, but with computers, not ticker tape.
Right. Right. Yeah. No, it's fascinating how things can still ring true, even
Mhm.
written, a long time ago. Um,
That's amazing.
Yeah, yeah. And so this next question, I'm relating it kind of to my poker experience, right? Like me studying poker, a lot of times, a lot of emphasis on like review your hands that you played, and you also hear this a lot in trading. It's like, hey, go back, review your trades. Now, can reviewing your trades, can it be like deceitful or like deceiving looking back on it in hindsight? Because you have that, you have that ability of hindsight of looking back at it. What are your thoughts on that?
Oh, I review my trades, and I review, like, I will play back the day,
Mm-hmm.
right? I used to do it every night. Now I do it Saturday, Saturday morning. But Sierra Chart, the software we use, has a replay feature, which is beautiful.
Right.
Um, and one of my buddies, he can replay, like, you can replay back like 100 days, right?
Mm-hmm.
And back test. But I will review the day, and I will look and see, oh, I missed that, or oh, I should be aware of that, or they're mechanically selling from this level. And so I will look and see how that structure developed during the day. It's kind of like watching game film,
Right. Right.
if you're a football player, because a lot of the trading stuff I've noticed, if I'm like mechanical about it and I think it through, by the time I've thought through the process, the trade has happened and I missed it. That happened to me for the longest time,
Mm-hmm.
because I'd be thinking, okay, I'd have a checklist. I mean, inventory is this, structures that, does it work? Our internals, and after a while, you internalize that, and it becomes like a linebacker, looking at a setup, and just instinctively knowing where the running back's going to be after a while, because you just keep reinforcing it, and they'll watch game film and all that discipline that everybody thinks is boring. Eventually, you see things, and then you can react without hesitating.
Right, right. It almost becomes like subconscious, exactly. And and I asked the question too because obviously I'm very limited trading experience and trading knowledge, and so I'm going to try and compare this to poker, and hopefully this makes sense to you. It's like I would go back and like review my hands, JJ, and obviously in hindsight I could say like, oh man, maybe I should have folded that because X, Y, and Z. Because this guy he blinked his eye a certain way, or if it was online, it's like, oh, I
Oh,
should have
okay.
told by his bet sizing. But in reality, I made the right play theoretically. And so like maybe with like is there any way you can look in hindsight with your trading and being like, oh, I should have known that, but there's things in real time that might be hard to actually understand while it's, maybe the market's developing. I don't know if that made sense to you.
No, no, that it kind of does. Because the thing is, I've never played poker, so I should learn how to do that. The thing with that is, I'll look, because so much of my trading and the way I look at the market now is based upon the structure of the market, and how inventory plays into that structure in the context of the day.
Mm-hmm.
um, I'll look and see and a lot of the times I will be able to see a situation or a pattern occur, and then make note of it for the next time. Because we do have a lot of recurring patterns,
Mm-hmm.
right? And technical people, who look at candlesticks and all those things, they realize that. I'll realize that when because a lot of day trading in the futures and the e-mini and the micro are inventory based, because there's an interplay between the retail trader and the wholesale trader. And I will look to see when retail is panicking and wholesale is absorbing it, and then once retail has sort of dried up, then wholesale will start taking it back up, and that, and then people will chase it and price will go back up. And a lot of people miss that, because they think once selling has started that it's just going to continue and continue, right?
Mm-hmm.
But a lot of the time, price will go down and it will be rejected. It will bring buyers instead of sellers. Lower prices. So those kinds of scenarios I'll look at over and over again. I hope I'm not rambling on here.
Yeah, no, no, no. No, no, got it. And yeah, we're gonna we should organize in the future, get a Confessions of a Market Maker trip out to Vegas to teach JJ how to play poker.
I all the time. I mean, I used to have an apartment in Vegas, and because my degenerate clients would always want to go down there,
Hmm.
but I never played. I mean, I'd sit next to them um, at these tables and things like that, and watch them throw away ridiculous sums of money.
Hmm.
And they're like, "Oh, we got a free hotel room." I'm like, "Yeah, you just dropped 50 grand.
50 grand
You
for the
know,
hotel room. Yeah.
you're not going to put a down payment on a condo, you idiot."
Yeah.
It's like, but that's where the thing. So I would just sit there and just look around. It was like I was really bored.
Yeah. Yeah. All right. All right. Yeah. So I think with that we'll jump into some listener questions. I mean, anything else that you would like to shed light on this topic as far as preparation and study?
No, you just you really, really. I don't know. I still have yet to meet somebody who can just come in and naturally trade the as in a retail sense.
Yeah.
And I took that for granted when I was on the trade desk because we just traded, our clients' order flow, and you want the price to go up, I'll move it up, So
Yeah.
you take a lot of that for granted, when you come into retail trading, and that was really hard. So I have to prepare. There's no way around it.
Yeah, absolutely, absolutely. And yeah, and with that, we'll jump into the listener questions. And then just a quick reminder to everybody out there listening: if you guys haven't already, if you enjoy the podcast, if you could like and leave a review, like it on whatever podcast platform, or if you listen to on YouTube, do the same thing as well. All right. And with that said, on to the listener questions. We hold these every week. And so if you guys have questions for me and JJ, any type of question is acceptable. Submit those in on Twitter. All right. So jumping into the first question, we got from Wingirl Trade. Can you explain the concept of the Micro E-mini education room and why educate on the micros only in your portal room? And Ray, is JJ a tough teacher? Um, well, no, I don't think JJ is a tough teacher. I think he's a fair teacher. I think he's a good teacher, but I wouldn't describe him as tough. As in, like, he's not, he's not like a football coach. He ain't barking in my ear. Um,
And I haven't thrown a phone at your head.
yeah, yeah. Thank God. Yeah,
That's how we were taught in the
yeah. Well,
old
thank
days.
God we're about like 4,000 miles apart or whatever. I don't know how I actually. But yeah, JJ, do you want to yeah, touch on the concept of the room a little bit?
The room is for people who are coming into this, or people who are having trouble and need education on, really what a market is, how to view a market so you can trade it intelligently. And what I've noticed with a lot of, you know sort of places, is they'll teach you uh, what's going on, on your screens, but they don't really teach you what's going on behind the screens. There is an agenda. Order flow has an agenda. When I enter an order to put in to buy 1 million shares of stock, I have an agenda, right? When I finance a company and I want to work out my investment into your retail buying, that is an agenda. So there is that, and there's also a structure and a system underneath, especially the equity market, that really does help a lot of the times with good trade location for me, and that's clearing. Um, for example, the micros, and the mini, they don't trade in a vacuum. They're based on the S&P 500, and those are 500 stocks. There's a mechanism and a clearing system, and a mechanics to how stocks are traded. That's why you'll see a market gap up in the morning, and all of a sudden, the bottom will fall out of it, and everybody gets burned that was chasing that gap. There are things like that that apply, that you can see very, very visually in a futures market, like the mini and the micro, especially the micro. The micro is a low uh, barrier to entry cost wise, so it's a great teaching and learning instrument. You're not going to become a millionaire trading the micro, but you are going to learn to trade well, and then you can just switch to the mini. Um, that is the focus of the room. The focus is to in really simple terms, the focus of the room is to help people look both ways before they cross that highway. Because or to use another analogy, it's basic anatomy for people who want to be a surgeon. I will take them from the ground up. People who don't know what a bid and an ask is, people who don't know what a tick is, an uptick or a downtick. I want to put the picture together in a way that people understand this is what's happening. This is what's motivating the people with the big money right now. So let's trade alongside them.
Absolutely, absolutely. And yeah, no, I'm very excited to be a part of this, launch this room on the 26th. we're going to bring the same type of vibe we have with this podcast, going to be good information, keep it fun at the same time. So, we look forward to seeing you guys in there. And next question is from @HollowPossum. What is the best trading strategy for a working professional that has flexible time during most days, but can't always be looking at the screen?
Well, what I've learned, uh, and a friend of mine actually, because I never traded off a cell phone. Okay, I've never traded off a cell phone before because I'm an old guy and I grew up with the internet where it'd time out or it'd cut out or the software would crash. So I never trusted it. But I have this friend, and she's a lot more intelligent than I am, and she trades off a cell phone. I mean, she'll look at the market on her screens, put on a trade, and monitor it from her cell phone. And if you move your stops up and if you know where your structure is in your head, you can do that. So, there are ways to trade, these markets. The futures markets are nice because they're a 23-hour a day
Mm-hmm.
market. So you can trade at night, you can trade during the day. You can look at the structure and say, look, I'm going to get in at this price. I'm going to get in out at that price. And here are where my stops are, my risk. This is what I'm looking at. And you can manage those trades from a cell phone. There's a lot of people who do it now. Software is so much more stable, than what I
Mm-hmm.
remember it. And it's very doable.
I mean, and this is a question I don't know, and that's why I'm asking it. Like, I mean, for yourself, right, or for anyone who likes to trade, with the TPO chart. I mean, is that something accessible from the phone?
That's not accessible. I do not know of any software that is a mobile TPO, but if you have your TPO references and you could put them down on a notepad in your phone, these are the references I'm looking at, and then you can, look at your phone and your regular chart and just, take those references and put them on your regular
Mm-hmm.
chart, right? And that works better for kind of a longer term trade. Like last night, for example, I looked at the market when it dropped under 29.18, and I knew it would rotate back up. So you could put on a trade and then go away for a few hours and put in your stops, and let the trade work for you. Come back and then trail your stops
Mm-hmm.
up. It's very, very possible, and that is a 4 or 5 hour time frame trade, and it paid really nicely.
Okay. So me trying to bring this back to the guy's question, right? Because he says he does say he has flexible time, right, during most days, but he can't always be looking at the screen. Now, let's say the cell phone, he doesn't want to trade off the cell phone because I would imagine most people probably don't want to. You know what I'm saying? What would you?
Well, I don't know. You're the younger demographic. Most people I know your age trade off their
To
cell
me,
phone.
that's not appealing. I almost feel like I'm doing that at a disadvantage. But then again, I'm not the most
Well, no,
knowledgeable.
no, but here's no, no. That's the thing that's what's changed. There are a lot of people who successfully trade off a cell phone. Listen, I was the first. I'm 30 years older than you are, 20 years older, so I'd be the first guy to go, those cell phone, don't trade off of it. But the more and more I talk to retail traders, and the more and more I'm around younger people, I noticed that they are doing it, and they're doing it successfully. So how do they do it? You take a longer term approach and you trail your
Right.
stops up,
Right.
right? While you're watching the
Right.
market. And if he's got flexible hours, then he can just, he can trade when he has time, and then when he doesn't have time, he just doesn't have to
Yeah.
trade.
Yeah. No, it makes sense taking a more a long
Yeah.
term trade. Yeah. Okay.
Mhm.
Cool. Cool. All right.
Right. And you can do that with
Right.
structure. Right? If you know the structure of the market and you know we're in balance and you're playing the opposite ends of balance, it's very doable. I never thought it was until I kind of did it last night, and
Yeah.
it really opened my
Yeah.
eyes.
No. 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 I'm even a little surprised to hear you say that's even a viable option now because this is something you never even talked about even off the podcast. So real
No,
interesting.
and before no, and I'm surprised at myself because before I was very close minded. There's a certain person in my life that came into my life, and she's really opened my eyes, at how close-minded I can be at
Hmm.
times, right? You're like this like crusty old trader, like I'll never do that, things like that, and then people, you talk to people and they're intelligent, and they show you a different thing, um, you start getting, like it opens your mind, and I'm very grateful to her for that. It's she's kind of like teaching an old dog new
Mm,
tricks. It's pretty cool, and another thing that she taught me, and I'll just bring this up. She trades multiple products, and I'm like, what are you, nuts? Right? You've got to trade only the E-mini,
mhm,
right? uh, but she does so successfully, right? Because she's a pretty smart cookie. So I started looking at other products using profile, and I was blown away how technical some of them
mhm.
are. And you can trade the micros on those, like the Russell and oil and things like that. So I am learning to be more open minded, and I'm learning a lot actually by interacting with a younger group of people. I'm really quite
Yeah,
happy.
yeah, no, it's cool. I mean, and even great of you to take an open minded approach and even bringing it back to the market profile. Like I've even found that fascinating as well. Like the point you were just talking about, how market profile can literally be used for all different markets. And even I read what Jim Dalton used it for, like real estate as well. When it,
Yeah, that would be interesting to
yeah,
see.
right. No, yeah, interesting, very interesting. So shout out to Hollow Possum for the question. We appreciate it. Um, Next question is from at should be trading, and he has two questions. So we'll start with the first one. How does T+2 settlement affect the markets? And I think you should probably first off start with what is T+2.
Okay, T+2 for equities means if I sell a stock on Monday, I can access the cash on Wednesday. That's all it is,
Hmm.
really. And in the old days, you didn't have to have money in the account to buy stock. You'd call up your broker and you'd say, "Buy me 1,000 Microsoft," and he'd go and buy it, and then you'd have 3 days to bring in a check. Right now, they don't do this because everything's electronic and you could execute a million times and blow up a brokerage firm before. So you have to have money in
Hmm.
the account. But the settlement process of equities is T plus the trade date plus 1 2. So if something trades on Monday, those trades settle on Wednesday,
Hmm.
right? And how that affects the E-mini and the micro is, especially during balance, T+2 is important, like the close, the halfback of 2 days ago, um, the high and low. Those will be valid reference points in trading the futures. And I kind of thought about that about a year ago, and I started using T+2, and I started noticing sometimes it's insanely accurate, like to the tick. And I was kind of curious why nobody else looked at that. And I think a lot of people forget that the ES is based on 500 stocks, and there's a mechanics to that. Once again, the mechanics and the plumbing of the
Hmm.
system.
Yeah, right. Okay, so his second question is, when overnight inventory is 100% long or short, is it good to try and fade that move? And if so, would it be reasonable to enter at the open in the hour you figure where to place your stops?
Okay, well, according to Mr. Dalton, there's a 65% chance of success fading that move, that there'll be a correction to overnight inventory. Now, one thing I learned from Peter Resnicek was to put it into
Uh-huh.
context,
Yeah.
right? If we gap up and we're on a strong gap, um, fading that move, if you just do it blindly, you really could get a
Right.
whooping. But if you do it in the context of you're watching the price action, I don't know exactly how long, but what I notice is, sometimes if the inventory is insanely short, like for example, uh, if we open the overnight and some sort of weird news event drives the open overnight really, really low, and then you'll see in the overnight that the shorters couldn't get the market lower, then as soon as that market opens in the regular trading hours, um, it'll rip back up. Everybody will think the market's going lower, and it'll just rip really quickly. And that is a fast trade you can take off the open. If let the market open for a little bit, you'll see that it's just not going any lower than the overnight
Hmm.
low, because the overnight has gotten so short. You also have to remember that, again, once again, because we're based on 500 stocks, there are market makers that are either long or short to retail from the night before, and they have to adjust their inventory,
Hmm.
right? So if they're short to retail at $50 and we open gap down and the stock's 45 or 40, they'll step in there and start buying to cover their short that they sold to retail the night before. And that is why these swings in inventory happen, right? Because the overnight in the futures is not tied to the S&P 500 because the market's closed. So it gets away and it gets
Mm,
pulled back,
okay. Yeah.
right? Right.
Yeah. No. Sure.
So that's the kind of things that I like to teach people is to think about what's going on. Are the market makers long or short stock? If they're short stock, they've got to cover, and if they have an opportunity to cover, they'll step in, and that's why lower prices attract buying instead of more
Right.
selling.
Right. Understanding why, like the what's going on behind the doors. You know what I mean? It's real interesting. Like that's what you definitely like brought to my
You know, I don't want people to yeah, I don't want people to get obsessed with it, but just know that there's something going on behind the pretty
mind.
lines
Right.
on the screen.
Right. Exactly. Exactly. All right. And shout out to at should be trading for the two questions. We appreciate you. All right. And last question comes from at buy side trade. My girlfriend of 2 years is not supportive of my trading pursuits. I haven't become profitable yet, but I understand it takes time. She's worried I'm going to lose the money I worked so hard to save. How do you guys suggest I handle this? I think you should dump her, JJ.
Oh, hey, oh, take it easy.
No,
Wait, okay, go. No,
I'll let
no,
you handle this one.
yeah, yeah, easy there, Dr. Phil. Um, okay, well, you know what? The best thing for you is that the micro has been invented, and you can learn how to trade a market without huge capital drawdowns, right? If you open an account with the micro and put 500, $1,000 in it, and you wipe that out, I mean, and it's going to take a lot to wipe that out because you'll have to trade really, really poorly and not do any homework at all. A bad day in the micro is 50, $100, right? And you can make that back, right? Whereas whether you put $25,000 in an equity account and you want to day trade that, a couple of good hits will take that out. And 25,000 is a lot harder to remake than 500 or a
Hmm.
thousand. So I would definitely, and I think if your girlfriend is reasonable, then she would understand that, and she would support that because you can learn how to trade for a lot less risk now.
How do you, in going off of this in this question, like, how do you explain to somebody, right? Because I've had this come up for me, right, in my, my little dating exploits, etc. Like when I, would meet somebody, meet a girl, oh, I play poker. So how do you explain this to somebody who might not even understand what, like, what we're involved in? Like, is it just too much of a disconnect, or is there some way to open someone's eyes? Well, I mean, what's your opinion, JJ?
Well, not well. I mean, it's for most people. I'll just say, you know what? It's just look at me as a guy, you know, who works as a mechanic, that works on the trucks that work in a market, right? It's really because that's what I used to do. I was like the guy who kept the semis on the road, that belonged to Walmart, right? Um, a market is just something that is created for people to sell something into that they bought at a cheaper price,
Mm-hmm.
right? It's an exit strategy for the people who have taken an economic risk by financing companies, right? So I'll explain that to them, and they'll be like, "Oh, it's like I financed this company for $5 million. I've got stock at 30 cents. We open it up on the stock exchange to trade. I've taken a risk by giving them that money to finance them. Because they might never become public. So that's the risk, and I lose all my money. I have no way to get it back. Um, Now that they've gone public, and my 30-cent paper or whatever is now worth $5. So that's my payout, and I'm exiting my investment into you, the retail buyer, right? Who's buying it, hoping somebody else comes along and pushes the price up, with demand. And people usually understand
Mm-hmm.
that pretty quick.
Yeah, it's got to be just a mutual level of understanding. Um, not to get into
Yeah. I don't know how to explain
yeah
poker though, because I have no, I have no, I'm like, I've never even, I don't think I've ever even
yeah
played it once.
no it's always
Any
always a
card game.
little weird. No, I mean a lot of times people would just like a lot of girls would just be like, oh yeah, that's cool. Some girls would be like, what are you talking about? Others would think I was a degenerate gambler. You know what I mean? Like,
Yeah.
so yeah, it's yeah, I don't know. You just gotta handle it in your own ways and just try and be eloquent.
And I think, well, exactly. I mean, in my day in the 80s, the people I knew who played poker were
Right,
degenerate
right.
gamblers, right? But now it's a popular thing, and it's a
Hmm.
social thing, and people are, it's very popular. And with the advent of online gaming and all these things,
Yeah,
the
you see it
world
on
has
ESPN,
changed.
so it has a little different light now. Yeah,
Yeah, like to me, guys playing poker are, three Asian billionaires in a house in Vancouver with about $4 million on the table, all
yeah. I
chain
heard, I heard, I
smoking,
heard,
right?
I heard Bill
At
Perkins
four
was there too. Yeah,
at at 4 in the morning, right? And I'm like, I don't know,
yeah,
that's not for me.
yeah. Those are the best games to be in, though, JJ. Those are the best ones to be in.
Yeah, I guess if you
Yeah,
knew what you were
exactly.
doing, but
Yeah.
I'm like,
But yeah, so shout out to at Byside Trade for that interesting question. We appreciate it. Thank you. And so yeah, so everyone listening out there, get your questions in for next week. We really enjoy, interacting with you guys and answering questions. And so I think it's going to wrap up today's podcast. JJ, any parting thoughts?
no, no. I just want to thank everybody who's. I really want to thank all the retail traders who reach out to me and ask me questions, and it's really nice interacting with you guys. And it kind of also reinforces my trading, having to go over things, and and also, like I said, it's opened my eyes up to a lot of different things, like different products, and maybe not to be such a grouchy old guy, and accept things and see opportunity where I used to kind of go, yeah, why do you want to do that? It's nice it's nice to discover new things, and I'm very appreciative
Definitely,
of
definitely
that.
beautiful thing, and yeah, just thanks to all the listeners, everyone who's been supportive of the podcast. Me and JJ really enjoyed doing this, so we appreciate you guys, and we hope to see you guys in our trading room next week. We'd love to interact with you guys, bring over the same type of vibe, have fun, create a good community. And so, with that said, for the Gorilla of House Street, I'm Cannoli Fingers. See you guys next week. All right.
Have a good night.